With the latest U.S. inflation rate hitting its lowest in May 2020, the Bangko Sentral ng Pilipinas' Monetary Board saw it fit to shear or trim a quarter of a point or 25 basis points off a 6.5 key interest rate to 6.25%. This as the Monetary Board projects confidence on a cooling inflation moving forward, as our Sujin Kim reports.
The Monetary Board at its policy meeting today decided to trim the BSP's target reverse repurchase rate by 25 basis points to 6.25%. BSP Governor Ellie Remolona Jr. says headline inflation is projected to trend downward to within the government's 2 to 4% target range despite the uptick in July.
We're somewhat more confident in the inflation numbers coming down.
We see headline inflation trending downward. Meanwhile, and this is the first time that we're releasing this information, the risk-adjusted inflation forecast is 3.3% for 2026.
Balance of risks to the inflation outlook continues to lean toward the downside for the rest of the year and 2025, with a modest tilt to the upside for 2026.
This outlook is supported by well-anchored inflation expectations over the policy horizon.
The downside risks are linked mainly to lower import tariffs on rice, while upside risks could come from the higher electricity rates and external factors. Despite tight financial conditions, Central Bank Chief says
the Monetary Board also expects domestic demand prospects to hold firm. Second quarter GDP growth has been solid and the unemployment rate has declined.
Public investment alongside easing price pressures and robust employment conditions are expected to support economic activity. The BSP says with inflation on a target consistent path, the macroeconomic outlook supports a more calibrated shift to a less restrictive monetary policy stance. Sujin Kim from the National TV Network for the New and Better Philippines.